Hello and welcome back guys to the channel, and on today's video guys I'm basically going to be breaking down a very deadly V75 scalping strategy that I would like to share with you guys. So before we get into it, make sure you subscribe, turn that bell button on for notifications, and let's get into it. Right, so this is like the trading view implementation of binary and whatever, but we're on the V75 pair and this is what we're doing. Right, so first we start from the high time frame bias. Right, what is the high time frame bias telling us? How is the market structure pushing through the high time frame bias? Now what we're waiting for is to see the market structure being put into place for us to trade it. Right, so when we kind of zoom out, and let's just consider the most recent price action because this is a scalping strategy for the lower time frames. Now the data in lower time frames far back here is pretty much not available, so we're just going to be using this whole recent price action. So what we're seeing here is that price is pretty much pushing bearish, right, ever since these breaks here. So we did have these highs being formed, and then we had this break right here, and from this break price made that retest and then went down. Now we're basically going to be considering three most important things throughout this video. Right, the first one is structure, how is our structural bias pushing, and the second one is supply and demand. Right, so basically most these two. The third one is pretty much confirmation that I'm not going to be touching it in this part. There's some premium stuff in there that I do not wanna touch, so let's just keep it vague. Now we'll be considering these two most important things, right? Structure and S&D. Now there's a video, there are videos explaining about all these two things in an in-depth manner, so if you do not know them or you don't know what we're doing here, you should pretty much start from like the beginning of the channel, or there's an actual playlist for the MMC footprint strategy. You can go to that playlist and work your way from the bottom to the top and get the full understanding of pretty much everything that I'm going to be saying throughout the video. Now from this area here, we had the structural breaks down, right, with the break of this low, forming this low here and then breaking again. Right, so from this break we had structure coming back up and breaking again. Right, so from this break here, this is the area that I'm mostly going to be working on here. So from this break, price went up and went down. So if price does this, a break of structure, then we're probably going to be looking for a supply zone in here that price is basically going to be working its way up into for that mitigation out. And once that mitigation is done, price can now go back down towards that low as its next liquidity run area, which is exactly what happened here. Right, price went up for that mitigation, and once that mitigation was done, price went down again, continuing with the trend, targeting that low as its next liquidity run area. And we have the same thing applying once again. Right, so we have a high and a low in this break here, so anticipating that price could come back up for that mitigation and then continue bearish if price wants to go bearish, targeting that low as its next liquidity run. Now from that, with that being said, let's now see how all this works. So let's just pretty much clear everything in here, make our chart as clean as possible. So this is the area that I'm basically going to be working into. Right, so boom, so we had this break of structure here. Now from this break here, price made its way back towards like a supply zone. I see one in here. We technically had two. We had another one here, but that happens. Price doesn't always mitigate all the S&D points left. Some will be mitigated in the future, and that's just how price moves. Price moves fractionally and not in a fixed manner. That's why not everyone manages to be in traders. Some make it, some quit, and it is what it is. But let's now start to focus from this area. So now we had this break here, and from that break we had several or multiple S&D points. One is there and another one is pretty much here, the original one that did not get mitigated. Now from this high here and this low, right, once we had these two things, it's pretty bad that this trading view implementation binary does not have the replay tool. If we did have the replay tool, this video could be way more fun than it will be, but it is what it is. So once now we have these two things, okay, so now we have those two things, those three things actually. We have the low, the high, and the break, plus the S&D points. Now we now know that, okay, so price will go up and go down, targeting this low here, right? So let's use that trend line. and mark this low as, you know, like the next liquidity run once we are on the lower time frames. Now, once we have marked everything that you need, so now you can now go to the lower time frames and start scalping this. So first we're gonna do it in both ways, right? We're gonna buy it and we're gonna sell it. We're gonna buy it from here, meaning that we know that price will go bullish from here. Okay, so we now know that price will go bullish from here towards either of these zones, right? Because pretty much when we were trading this price, we assume that this price action here doesn't exist. So we know that price will go bullish from this low towards an S&D point, whether this or this, right? And we'll be looking at that from the lower time frames. Now let's go to the lower time frames, the 5-minute actually. So this will be the 5-minute trades. Keeping it simple for you guys. Make sure you're absolutely killing it. So boom, so let's go back we'll start from this low here. Okay, pretty much I don't think the price action behind here exists. That's why I said that we will be using the most recent price action, but it is what it is. So we had price pushing bearish, right? And from this position, what do we have? We have a high and a low, right? A break of the high will indicate that price is going bullish. A break of the low will indicate that price is going bearish. Now let's see what happens. So price now comes and breaks this high. So from this break of structure, what are we looking for? Structure and S&D. Structure in terms of what? A break of structure. S&D, since it's a bullish trend, we will now be looking for demand zones. Now, if you don't know what a demand zone is, make sure you go and watch all of the supply and demand videos that are available on this channel. I'm sure you will get some important content in there that will help you understand what we're doing here. Lo and behold, we had this as our demand zone. Now, as I say, if you have watched my supply and demand videos, right, I did say that these zones don't always hold. Sometimes they will get what? Mitigated and hold perfect. Sometimes they will be traded through, and sometimes something like this will happen. Price will come, absorb it, and then leave, right? This wick here, this is what we call absorption. And if you don't know what that is, make sure you go back and watch the absorption and displacement video, and we'll be perfectly in an understanding sense from that. So we now start our trades from here, right? So boom, we have a buy trade there. Our stop loss is just below this wick here for protection. Boom, and we're targeting the highs, right? So we are scalping. If you want to hold it, it's up to you, but I would recommend you either close like 70% from this high and start holding the next 30% of the lot used throughout like the throughout the trend, because it's a scalping strategy, it's not a swing trade. So we have entry 1 there, which goes perfectly. So this is a perfect winning trade. Boom. So we will count like these RRs at the end of the video and see our win rate, right? So this is like trade 1. Now we continue to follow price, right? So this TP was pretty much there at the high. We now continue to follow price. So price breaks, and from that break forms this high, comes down, mitigates what? This continuation zone, right? So we now have a trade 2 there at this continuation zone here. Boom. So let me take out this this thing here. Boom. So this is trade 2. Boom there. Okay, so I used the bearish one instead of the bullish one. Boom. So boom right there. Okay, did I put something else in here? Yeah. Okay, so let's move this up here, right? So you could use this or this, that's up to you. Just use that, and we're looking to target this high, right? Boom. So that's our trade. That's our second trade. We're scalping this. Scalping strategies require higher lot sizes. I mean, you do know that, guys, if you are a scalper, and it is what it is. So we now have another break of structure here with price breaking, and once price breaks, we now know that price will come back down towards a certain area that does require mitigation. Lo and behold, you do have this zone here, a continuation zone here. Now let's remove these lines and see how that happens. So we have this continuation zone here. Boom. So this is third trade there. SL below the zone, there, right? Boom. So we were looking to target what, this high here. Boom, third trade, one, right? Now, the same thing, we're looking for what? A break of this structure, which happened where? With this high here. Comes back down, doesn't reach our S&D zone. It is what it is. Price breaks off again, right? With this break here. Comes back down, tests our what? Our demand zone, right? Okay, so let's remove this. Boom, right? So this demand zone here, tested with this wick here. Okay, so let me just move that there. Take this a little bit higher, close this within, and boom, trade one, right? So we were looking to target this high here. We're continuing again. So price breaks, and from this break here, we have what? A demand zone and a high as our TP, right? So let's clear the lines and put that, highlight this demand. Okay, demand highlighted. Now we put that bullish trade. We close it within. Boom, we're looking to target the high. So this is trade what? 1, 2, 3, 4, 5. Trade number 5, 1. So we have a break again. And from that break, we have a high and a low. Plus a what? A demand zone here, right? Boom. And how I pick these demand zones, I don't have to explain it here. You can just go and watch my supply and demand videos and you'll see everything, right? Boom. So you have your demand zone, the last down move. Okay, as you can see, right? The last down move before the up move started. Demand zone, as simple as that. So it gets tested there. Is the stop loss below that wick. We're looking to target the high, trade number 6, 1. We have the same thing happening again, right? Boom. So we'll still continue to look for buys until we reach that zone, our demand, our supply zone. That will start to look for sells from that area. So price breaks again here, creating this high from this low. What do you have? Pretty much everything here is mitigated. So the last down move before the up move started is this. As you can see, this candle here with this wick that comes down. That's our last down move before the up move started. That's aka our demand zone. Boom. So you have your what? Trade number 7 there. Stop loss below there. Boom, right? You're looking to target what? That high. I mean, let me remove these so that we can get the actual high there. Damn, trade number what? I don't know, 7, 8. Okay, so let's discount this because we're gonna equate an overall winning rate, right? So we started from there, 1, 2, 3, 4, 5, 6, 7. Once again, you have the same thing playing out, right? So this is pretty much tiresome, guys, because we're doing the same thing over and over again. Break, high, low, S&D point, demand zone, right? The last down move before the up move started, aka demand zone. Boom. That's your demand zone, and that's your trade number 8. With the low as the stop loss, staying within and targeting the high there. Again, so this is pretty much tiresome, right? So boom, right? So you have a high, a break, I mean a low, a high, a break, boom. So price comes back down to where everything here is mitigated, right? So make sure you know the mitigation, you watch the mitigation video so that you know what mitigation is. Everything here is pretty much mitigated. So what we're looking for is that volume, right? The volume that took price high at a very high momentum, which is what here, right? So boom, that's your last up move before the down move. Now, I mean the last down move before the up move, which is here. Now this will sometimes happen, right? Boom. So that's why I said you should, in this case of volume, you should use a higher protection rather than the low, right? Because this trade got you taken out if you only used the zone itself, right? Because this is what we call absorption, as I said before, right? A wick comes down, absorbs it, and price goes. So let's count this as a loss, right? Boom. So you have that area there that gets that gets absorbed. So this is losing trade number 1. And now what we have is a break of this high again through this. You have your S&D point here. You have your S&D point here. Now pretty much they are, there's S&D number 1 and S&D 2.0. So you should, include them all, you know, we have this supply zone number 1 and supply zone number 2 aligned together. So the best protection from this area is to use the okay, sorry for that, is to use this supply zone combination, right? So boom, and you are looking to target the highs, and that's your trade number. So this was like number 9, which is the lost. Trade number 10, win. Still looking for the same things, right? So we have structural break, price goes up, comes back down towards this zone here. Again, there's supply zone number 1 and supply zone 2.0, so we take all of them as they are. So that's our overall supply zone. That price comes down to mitigate, and after that mitigation, price now comes back there, and we're looking to target we're looking to target the high and pretty much close this within. Boom. So there, guys. The video is becoming too long, but you know, that's trade number 11. That's a trade 1, and you have the same thing applied here. Break of structure. Now structural breaks, S&D point. So this could be okay, so let's remove these. Let's put that rectangle in there. Our S&D zone is there. Our trade is there, right? So you know, we're just staying real to ourselves. There's no need to cheat. A loss is a loss, and you know, it is stop loss below the low. We're looking to target the high, and boom, that's trade number 2 lost. So this was like the 11th trade. Yep. So trade number 11 lost, which is our second trade to lose since the beginning. And now we see price doing what? We see price now changing structure, right, from bearish to bullish. And what we have is a break of this low, right? So this is why it's important to understand structure, right? So this is like the lost here, loss number 2. Let's just close it like that. So we had the break of this low, and from this break we had a what? A high and a low. What we're looking for is mitigation at the S&D point for price to go bearish, right? Because price did change its character. Now we are following price wherever it takes us. Boom. So you have your bearish trade here, bearish trade there, stop loss above the high, and you're looking to target what? The low. This is your TP area. Let's close this within. Boom. Trade number 12, 1. You have the same thing happening again. The break of the structure, that retest that never got to any S&D point, no meaningful trade in there. We'll leave it as it is. Yet again, you have a break here, right? You have this break here. Now, breaks happens with bodies and not wicks, right? So this structure was pretty much broken with this there. So we have a high and a low. Next thing, S&D, right? So let me reduce this. Next thing we're looking for is the S&D point, right? The last up move before the down move. The supply zone. Boom, lo and behold, you trade here. You stop loss at the high, and you're looking to target what? The low, right? Which so this trade runs, boom, TP hit, and from that area we now have what? A high, low. That price comes, boom, violates it, and what happens next? Price continues to go bullish from here towards our what? Our zone, right? Boom. So our zone is tapped. Now we did manage to catch trades on both sides. So lo and behold, I mean, there was also a buy trade here, right? So from this break here, right? Boom, break, S&D here. Okay, so sorry, there, S&D point is here. That's the S&D point. I mean, there's S&D 1 and S&D 2, so we'll take all of them. Zoom in a little bit so I can show you guys S&D 1, S&D 2, and you know, that bullish trade is from this retest. Stop loss is below the zone, and we're looking to target the high. Now, from that area, price has now tapped our zone. So with price tapping our zone, there is no need to look for buys because we are already at a supply zone, a supply point, meaning that it's a point in which the bearish move should now start. Lo and behold, what do you have? A change of structure. Boom, structure changes. And so this, it's pretty much tiresome, guys. So there's a structural shift from here. There's an S&D zone here, right? So okay, I mean, I drew those horribly. Boom, S&D zone, price comes back up, mitigates, leaves, right? And okay, I pretty much lost the area. So that's basically it, guys. So from this area, as you can see, We cut those bullish trades, price comes up, absorbs it, and now price falls off from that supply point towards all the way down there to its next liquidity round. Now we could also pass through the selling trades, but the video is becoming already too long, and I don't want to add confusion and bore you guys. So with that being said, if leave a like if you did like the video, and if you didn't, let me know why in the comments. Make sure you subscribe and hit that notification button for further notifications on updates and posts from the channel. And until the next one, guys, stay safe.